Good afternoon, ladies and gentlemen. A very warm welcome to you on Business Today Television. Today, we discuss some of the quality investments that are available to you at fairly reasonable prices, especially those compared with 6 months ago or 1 year ago. As usual, this is not an invitation to buy or sell, but an invitation to at least look at the following instruments for your long-term portfolio. Should you wish to purchase this or maybe act in an opposite manner, it's always best to conduct an independent financial advisor or a mutual fund advisor. Today we are going to discuss Nippon India Asset Management's a very well-known product, CPSE ETF. CPSE of course stands for Central Public Sector Enterprises, and as the name suggests, CPSE ETF, which is an exchange traded fund, is comprised of 11 top-notch PSU Navratnas, which have been a part of our investing journey over the last many decades. Let's take a look at what the ETF is all about. From the very basics, the net asset value of the CPSE ETF is 82.73, and at this moment it is trading at about a 25 to 30% below its all-time high. Let me also get that data for you in a while. I will request the PCR in the meantime to show the CPSE ETF in terms of the index, and that itself is a mirror image of how the CPSE ETF has worked. Allow me just a moment to get that data for you. Yes, this is it in front of you. 5912 is what the index is at, and the CPSE ETF's all-time high was somewhere like 106, which was seen in August 12th. The CPSE ETF at the moment is available at about 82.7. Let's just round it off to 83. So it's available 17% below its all-time high. And let us now get into the details and the logic as to why CPSE ETF from Nippon India AMC makes sense. Ladies and gentlemen, as the tariff war has been raging across the world, equities are in a volatile space, correcting very heavily, especially in areas where the valuation was at a difficult piece of time. What also needs to be seen is the background in which this market is operating. Of course, we have corrected very sharply on the Nifty, about 15-17% in the last 6 months or so, but PSU stocks, especially those comprising the CPSE ETF, have been in a downturn for the last 1 year or so. They had their rally earlier, they have corrected for over 1 year and are now ripe for further purchase for the following reasons. Central public sector companies have nothing to do with tariffs. They are domestically oriented and cater to the Indian market. Many of these CPSE companies which are a part of the ETF are heavily dividend paying. First, let me just give you an idea what is comprising this CPSE ETF. As we have said, it is available at 82.73 per unit. The ETF was launched in March 2014. It comprises of 11 PSU companies. The return since launch is 15.14% CAGR, and the corpus, as I have said, is 33,000 crore rupees. Look at the price to book of this overall portfolio. It is a meager 1.78, and the price to earnings ratio of the overall portfolio is just 11.7 compared to the 18 that the Nifty is trading at and many other indices which are far higher than 18. So, it is a relatively undervalued asset comprising of top public sector companies such as NTPC, which is India's largest thermal power producer, Power Grid, which makes all sorts of transmission networks for power utilities, Bharat Electronics Limited, India's premier defense producer, ONGC, India's largest explorer for oil, also India's top company by terms of profit. Coal India, the nation's biggest coal producer, NHPC from the hydropower space, Oil India, Cochin Shipyard, NLC India, NHPC and SGVN. All these companies are top Navratnas which have a huge reputation of making good profit and of course paying a huge amount of dividend. If you look at the individual PEs of these companies, they are also substantially low. NTPC at the moment is trading at a PE of 15.7, below Nifty's PE. Power Grid has a similar PE to the Nifty, 17. Bharat Electronics is of course at a higher PE of 41, but look at ONGC and Coal India, sub 10. The PE of ONGC is 7.1, Coal India's PE is 6.8. So, this is a very concentrated portfolio of top performing Navratna companies which are domestically oriented. They are not impacted by any manner from the tariff war that is happening globally. Apart from that, they are immensely profitable. They have corrected sharply from their all time highs and are now available at an attractive dividend yield. Also, look at the phenomenal returns that the CPSE ETF has given to you over time. We did a calculation from the beginning of the launch of the CPSE ETF, which was in March 2014, and a simple 11-year SIP of 10,000 rupees per month is now 38.96 lakh rupees, which has compounded at 18.5%. Also remember that this is a time when the ETF is actually trading 17% below its all time high. If you were calculating it at its all time high, this return would have been phenomenally better. Over the last 3 years, 5 years, 7 years and 10 years, the rank within this category for equity thematic funds has been first and second. This is a top performing CPSE ETF which you can buy either from Nippon Asset Management Company or even tell your broker to purchase it for your demat account. The only thing that you should do is put in a monthly SIP either with the AMC or an automated purchase with your broker. These are quality assets, as I have repeatedly told you, because there is a shift in the buying pattern. A lot of funds, a lot of individuals are now focusing on growth oriented companies which are looking at the domestic market, and that is the reason why this CPSE ETF makes sense. Look at the 3-year period, the CAGR return is 32%. It handsomely beats the PSU index as also the category. The 5-year CAGR return is 38%, again beating the category average and the index, and the 7-year return is 16% in line with the category average. So, this, ladies and gentlemen, is something that you can look at. Again, the market will inflate towards better valuations, and these entire assets are below the average PE of the Nifty, therefore are relatively undervalued. So, please look at the CPSE ETF as a part of your wealth creation strategy, as also a part of your long term mutual fund portfolio. Again, I repeat, this is not an invitation to buy the CPSE ETF. For that, you need to consult an independent mutual fund advisor, but this is an opportunity that is there in the market to buy quality assets available at relatively cheaper prices because of the market downturn. Thank you for watching.
Kashmir is fast turning into a tulip land.